Finally, I've got some good news. After months and months and months of me coming on talking about interest rate rises or interest rates remaining the same for the last 14 months, I think it's been. Finally, I've got some good news for you. And I'm sure you've already heard, but the Reserve Bank today reduced their interest rates by 0.25%. So the cash rate that they control has reduced from 4.35% down to 4.1%. And that means that the majority of us with variable rate home loans will see our interest rates reduce by 0.25% over the next couple of weeks. And I'll talk to you about lender specific timeframes on when they will reduce their interest rates here at the end of the video. Um, if we dig a little bit further into the RBA announcement first, the Reserve Bank did make note that inflation seems to be back under control and that they expect it to be in that target band of 2 to 3% by early 2026. So they're very happy with where inflation's sitting, actually making a point that it's come down quite a bit or quite aggressively over the last couple of months, which is a good sign. They did make note that they're concerned about the economies around the world, especially with the introduction of tariffs by the crazy leader in the United States. Fingers crossed he's not too crazy, and we don't see too much in the way of tariffs affecting the Australian economy. But time will tell on that. I think right now we just need to be happy that we saw the Reserve Bank reduce interest rates, and they are talking about potentially further interest rates to come. The next announcement is on the 31st of March, so we'll see if we get another rate rise in succession or rate drop in succession. But my expectation is that we'll see them hold off and not make any further announcements on rate drops until likely May. So we just need to be happy with the 0.25 that we've got for now. As far as numbers and what it means for those of you with a mortgage, if you've got a 250K mortgage, it's going to save you about $40 per month. If you've got a 500K mortgage, $80 per month. $1 million mortgage, you're looking at $160 per month that it will save you. So a decent difference to the pocketbook and to your cash flow. Not a huge change. Obviously, we want to see multiple rate cuts before we start seeing that big change in cash flow, but every little bit helps. As far as borrowing capacity, for first home buyers, you're not going to see a huge increase in your borrowing capacity just because of the rate drop. As an example, someone that's single, earning $80,000 a year with no debt, your maximum loan amount is about the 405 to 410 mark. And if we take the new rate cut into account, it's going to increase your borrowing capacity by about $10,000 to $15,000. So again, not a huge difference. For couples, if you're on $160,000 combined with no debt, you're going to look at $20,000 to $25,000 as an increase in your borrowing capacity. So again, not a huge difference. We want to see 2, 3 rate drops coming into play before we see this massive difference in borrowing capacity. But I will say, my expectation is that as interest rates come down, we will likely start to see, especially here in Victoria, the property market take off again. The property market in Victoria has been sitting sideways, sitting pretty stagnant for the last 24 months. And with the interest rates starting to get lowered, my expectation is that we'll see the market lift. Property values will increase. So if you are thinking of getting into the market for the first time, you might want to start looking around and just getting a gauge of where things stand and see if you might be ready to jump in now. Because I do expect that we'll see values kicking up a fair bit in the coming months. If you're upgrading, if you're selling an existing home to buy a new home, when you're buying and selling in the same market, usually it's going to wash itself out. You might sell for more and purchase for more, but it's going to balance itself. So not a big deal there. Investors, for all of our investor clients, we've actually seen a lot of headway with investors lately in Victoria. I think once the Victorian government announced that they were going to start charging land tax for investment properties, a lot of clients started looking to Queensland. But the market seems pretty inflated in both Queensland and New South Wales. So we're starting to see more and more clients buying here in Victoria. And so if that's something that you've thought about, then with the lower interest rates and potentially the higher borrowing capacity, and even potentially the higher equity that you've got in your home, maybe an investment property is something that you might want to consider. For the repayments, because your mortgage is dropped by 0.25%, the expectation from all clients is normally that your repayment is automatically recalculated based on the lower rate. And that's not the case. The bank will not automatically lower your repayment. They will keep your repayment the same, which means if you continue paying the same that you are today, when the rates drop in a week or 2 weeks' time, then you're going to pay your loan off faster because you're paying the same amount on a lower interest rate, and so you're going to be paying more principal or more of the balance off the loan and reducing your loan term. If cash flow is a concern and you want your repayment lowered, then you need to either hop onto online banking for some banks, or probably best to just give the bank a call and ask them to lower your repayment based on the new interest rate. Otherwise, it will remain the same. And that's not the case for when rates increase. When rates increase, the banks will automatically recalculate your repayments to match the higher rate. But when rates decrease, your rate will decrease on your loan, but your repayment usually remains the same, right? But again, if you can keep paying the same amount that you're paying now, you will pay that loan off at an accelerated rate. So I definitely recommend that you try and do that because it will reduce the amount of interest that you pay over the life of the loan. We have done over the last 3 months, I believe 660 reviews for existing clients. So that's where we call up your existing bank. We jot down the interest rate. We compare that with other offers. And we even go back to the existing bank and say, hey, you need to reprice the client to keep them and give us a better rate. And so oftentimes we've contacted clients over the last couple of months advising them, you don't have anything to do. We've just lowered your rate for you. And we'll continue to do that. But if we've not spoken to you in the last 6 months, and because of this latest rate change from the RBA, you want to review where you're at, give us a call. We're always happy to do another review for you. And we'll see if we can't reprice you, keep you with the same lender, or look to see if there's something better with another lender. As far as future rates, I want to kind of set expectations properly here. I do expect that we'll see further rate drops from the Reserve Bank, potentially 2 or 3 this calendar year. But I don't expect the banks will pass on the full rate drops each time. I think every single bank will likely pass on today's rate drop of 0.25%. It would be financial suicide for any bank not to, because it's going to be so relevant and in the news, and everyone will be paying attention. But after the second or the third time that the Reserve Bank starts to reduce interest rates, it's likely that banks will start to hold back some of those rate cuts. And so when the Reserve Bank drops by 0.25, the banks may only offer you 0.1% discount on your rate or 0.15%. And when we start to see those discrepancies with bank reductions in rates, we'll start to see bigger differences between banks as far as what they're offering and their competitiveness. Right now, banks are pretty much all the same. They're offering anywhere between 6% and 6.15% before the rate drop for new clients over $500,000. They've not been that close and that similar, all of them across the board, big banks and small banks, have not been that similar in my 17 years as a mortgage broker. There's always been bigger discrepancies between lenders. Um, so I expect, because all of them are pretty much the same right now, that we'll see greater opportunity for refinances in the next 3 to 6 months. I also expect that we'll start to see some refinance rebates coming back into play. So those 2 and 3 and potentially $4,000 refinance rebates that were offered 2 or 3 years ago, those have all pretty much gone. There's only one lender that's currently offering a refinance rebate right now. So my expectation is as the competition comes back into the market and lenders start to claw for new business, we'll start to see some of those benefits coming through. And that might be a great time for some of you to consider refinance. Um, Thank you very much for your patience over the last few years as interest rates have come up. We'll continue to keep you posted if we hear of anything that's worth considering in the market. And as always, please reach out if you ever need a review, or if you've ever got concerns, or if you want to talk about different opportunities, or if you're looking to make a purchase, give us a call. Always happy to chat. Enjoy.